Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fast Retailing Co. Limited quarterly report. Fast Retailing Co. Limited market capitalization of $936 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Fast Retailing Co. Limited holds a significant advantage in their industry. Fast Retailing Co. Limited trades at a higher price-to-earnings ratio of 44 times and a lower price-to-book ratio of 0.08 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Fast Retailing Co. Limited offers a diverse range of businesses and services through its various segments. At the core of its operations are the UNIQLO Japan and International segments, which manufacture and retail clothing for men, women, children, and babies under the UNIQLO brand name. In addition to UNIQLO, the company operates other brands such as GU, PLSD, Theory, COMPTOIRDES, CO2 and NIRS, J Brand, and Princess Tam Tam. These brands cater to different markets and demographics, providing customers with a wide range of choices. The company also provides real estate leasing services, allowing it to generate additional revenue streams beyond its core apparel business. Furthermore, Fast Retailing sells its products through online channels, making it easily accessible to customers worldwide. Overall, the company's diverse portfolio of brands and services enables it to cater to various customer needs and preferences, solidifying its position as a leading apparel designer and retailer in Japan and internationally. Der Aktienkurs von Fast Retailing Co. Limited, 9983 TSC, der Muttergesellschaft von Uniqlo, hat sich in den letzten Jahren positiv entwickelt. Einigwichtig Uranus haben dazu beigetragen. Zu Beginn des Geschäftsjahres 2025 meldet Fast Retailing Rekordgewinn für das Wirtschaftsjahr in Folge. Dies trug positiv zur allgemeinen Aktienperformance bei. Im Herbst und Winter 2025 verzeichnet Uniqlo Japan stark monatlich Umsatzzahlen, was auf die Cooler Witterung zurückzuführen war. Die bedeutendsten jüngsten Uranus, die zu einem erheblichen Anstieg des Aktienkurses führten, während die Bekanntgabe der starken Ergebnis für das erste Quartal des Geschäftsjahres 2026 und die Anhebung der Prognosen für das Gesamtjahr. Fast Retailing meldet einen Anstieg des den Eigentümern Schemberen Juins 117% im Vergleich zum Vorjahr auf 14.745 Milliarden Yen und übertraf damit die Erwartungen der Analyst. Der konsolidierte Umsatz stieg im ersten Quartal des Geschäftsjahres 2026 148% im Vergleich zum Vorjahr auf 10.277 Billionen Yen. Der Betriebsgewinn stieg im gleichen Zeitraum rund 34% gegenüber dem Vorjahr. Das Unternehmen hat seinen Umsatz und Nettogewinnprognosen für das Gesamtgeschäftsjahr 2026 an. Die Global Expansion und die Erholung auf dem chinesischen Markt trugen zu diesen starken Ergebnissen bei. Auch Europa und Nordamerika verzeichnet ein starkes Umsatzwachstum. Dies Nachrichten führten im 8. und 9. Januar 2026 zu einem sofortigen Kurssprung von 7% bis über 10% bei der Fast Retailing Aktie. Insgesamt trugen die positiven Nachrichten Uranus, insbesondere die starken Quartalsergebnis und die angehobenen Prognosen, Erheblich zu den Kursbewegungen innerhalb des Jahres bei. The primary drivers of revenue growth for UNIQLO can be attributed to several key factors. Firstly, the strong sales of fall and winter products have contributed significantly to revenue growth. Additionally, successful marketing strategies have also played a crucial role in driving sales. The expansion of UNIQLO's brand recognition and customer trust worldwide has further boosted revenue. Furthermore, the opening of new high-quality stores, including flagship stores, has provided a significant boost to revenue. The collaborative business with JD.com in mainland China has also been a major driver of growth for UNIQLO International segment revenue, which increased by 20%. The global brands segment revenue has seen an even more impressive increase of 114%, although this figure may be subject to revision. Overall, these factors have contributed to the company's total group revenue increasing by 15%. On the other hand, there are several factors that have led to a decline in revenue for UNIQLO. The weakening yen exchange rates on forward contracts for procurement purposes has had a negative impact on UNIQLO Japan's revenue. Higher royalty expenses in UNIQLO Taiwan have also contributed to the decline. Furthermore, the theory business has seen a decline in revenue and profit due to lackluster sales in the USA. Additionally, the Comptoir des Cotonniers and Princess Tamtam businesses have experienced a decline in revenue due to store closures. Net income experienced a mixed trend across the company's segments. While consolidated net income rose by 11.7%, Global Brands' net income declined by 14.8%. In contrast, GU saw a significant increase of 20% in its net income. This disparity can be attributed to varying performance levels within each segment. Profit margins also underwent changes. The gross profit margin expanded by 0.7 percentage points to 55.2%, indicating improved pricing and cost management. Additionally, the selling, general, and administrative expense ratio decreased by 1.7 points to 35.2%. Furthermore, business profit margins in UNIQLO International increased by 2.4 points, while GU's profit margins rose by 2 points due to enhanced volume planning and inventory control. These improvements suggest that the company has made strides in optimizing its operational efficiency and cost structure. The company is indeed generating positive operating cash flow. This can be seen in the net cash generated by operating activities, which shows a consistent increase over time. For instance, on page 7, it is reported that 191.7 billion was generated from operating activities in an unspecified year, 2024. Similarly, on pages 12 and 13, we see that the company has continued to generate positive operating cash flow, with 87,697 in 2024, yen 191,798 in 2025, and yen 30,458 million for the 3 months ended November 2025. These figures demonstrate a clear trend of increasing operating cash flow, indicating that the company is financially stable and able to cover its expenses. The performance of various segments within a company has been analyzed, revealing both strong and weak areas. On the positive side, UNIQLO International has shown impressive results, indicating a successful expansion into global markets. In contrast, 2 segments have underperformed, Global Brands and UNIQLO Japan. These regions have struggled to meet expectations, suggesting potential issues with brand recognition or market penetration in these areas. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets or businesses during the period under review. This suggests a stable and conservative approach to business operations, with no major changes to its portfolio or structure. As such, there are no notable developments to report on this front. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. On the matter of dividends, it is clear that the company has indeed paid out dividends in the past, with specific amounts noted for years 2024 and 2025. The figures indicate a consistent trend of increasing dividend payouts over time. In addition to dividend payments, the company has also engaged in share buybacks, purchasing back shares from its shareholders in both 2024 and 2025. The amounts spent on these buybacks are substantial, with totals exceeding 97 billion yen in each year. This suggests that the company is committed to returning value to its shareholders through multiple channels. That concludes the financial summary for Fast Retailing Co., Limited, feel free to comment below, and I will be happy to answer them when possible.